Reed,
Perfect.
thank you for taking time being with us today. Tell us a little bit more regarding your background and how did you get into real estate?
Sure thing. Yeah. So my background is in structural engineering and civil engineering. I studied for 5 years at University of Queensland in Australia, and then I moved to the United States in 2012, and I started investing in real estate back then. And at the time of getting involved in real estate, it was actually a little bit before 2012. I got involved in real estate. I was in 2009. Really wanted to use my money to get it working for me, and I didn't know how to do it. So I was very much looking for options to use my money to invest in, and to find a way in which I can create passive income. And back in 2009, 2010, when I first wanted to do this, all I knew that I wanted to escape the cubicle. I wanted to leave my day job. I wanted to go and then be essentially get paid for living my life. But that's essentially how I got started all the way back in 2009, and it's snowballed ever since.
But how did you do it? So you started reading. If you were an engineer like me, I'm an engineer as well. So you started reading. So how did you come about and actually got your first deal?
Yeah. So the first reading I did was the moment of what am I doing with my life. That was the first moment. I looked. They're like, what the hell? I don't subscribe to this, this adage of working 9 to 5 for the next, 50 years of your life. So I started there and I picked up the book, Rich Dad, Poor Dad. And that really opened my eyes. Once I picked up that book, it really sort of started to say, hey, this book resonates with me. This is exactly what I want to do. I want to go from an employee to an investor. How do I make that transition in the quadrant? And then from there is all about what you said, educating myself on different forms of real estate investing, so going to meet up events, reading as many books as I can. And over a period of about 3 or 4 years, or maybe less, about 3 years, I started to develop a very good understanding. In that time, I also moved to the United States. I'm originally from Australia, but I now live here in the United States. And I was going to do a real estate deal in Australia prior to leaving in 2012. But I still wanted to live in the United States. My wife, she's American. So moved here, moved to New York City, didn't have a job, found a job, but I really was consumed with the fact that I wanted to start buying real estate. So my first deal was actually in upstate New York, and I bought it for $38,000. It was very, very cheap. The barriers to entry here in the United States are a lot lower compared to where I'm from in Australia. So I was able to use some money that I'd saved. I didn't have any. I wasn't able to use any of the bank's money because I didn't have any credit here when I first fresh off the boat. So I just purchased it all cash. After about 6 months of owning that, I refied some money out, bought a second one, bought a third one, and slowly built up a small portfolio over about 12 months. And then from there, I've scaled quite significantly since then.
But if you bought something in New York, and I think you're guessing where I'm at now, how do you buy something that costs about $40K in New York? What type of?
Not New York City, upstate New York, which was about a 4-hour drive. So yeah, I definitely was living in New York City. Obviously, couldn't afford the boroughs, Brooklyn, Manhattan, Queens, all those sort of stuff. But I drew a circle around New York, a 4-hour drive, and I said, okay, what can I invest in within 4 hours drive from here? And I happened to stumble across Syracuse, New York, which is in upstate New York towards the border. A lot cheaper real estate up there.
And what type of it's a C type, a B type? Tell us a bit more.
It was probably more of a C- type of area. And again, it was my naivety about what I was buying. I was renting to Section 8 tenants, which Section 8 here in the United States is government assisted housing. And so I had my trials and tribulations with my first couple of deals. But I actually only just sold my last one of that first portfolio actually about 6 months ago. And we're sitting here in 2017. So I owned it for a good 5 years and produced some fantastic cash flow. But I ultimately have scaled since then and got into larger multifamily.
And that first one, was it a single family? What?
It was a triplex, actually. It was a small triplex. And the beauty behind it was I knew I wanted to get involved in multifamily because of the power of having multiple units, right? Multiple income instead of just one house. And I also could look at from a risk point of view. If you have a single family house, a tenant can get up and leave, and that's 100% vacant, right? So if I have 3 of them, it's less risky. So I stumbled across a triplex. I put in about $15,000 worth of renovations, and I was able to increase the rents about $60 each per month per unit. So again, really fantastic to the bottom line in cash flow. And I was able to take these same principles that we're talking about right now in terms of increasing the value and increasing rents, and then apply it on a larger scale on 50, 100 unit properties. But I cut my teeth very much on the small stuff getting started.
And when did you start syndicating? You did it all by yourself until your first commercial real estate asset. When did you start syndicating?
Yeah, good question. So so to just rewind back a little bit, I was still living in New York, 2012, 2013, 2014. Was buying, had bought about 3 or 4 very small houses, maybe combined worth of 250K, somewhere in the order of 60 to 70K each, with some bank financing, a bit of money down. I'd flipped a house in Philadelphia. So I had a bit of experience, but I essentially ran out of my own money. A buddy of mine came down from Vancouver, and we had a beer one night, and I was telling him all these great stuff about it. I was doing all these fantastic real estate deals, and he told me he just closed on a 70 unit property. And I said, how the hell did you close on 70 units? And he told me about OPM, other people's money. And that was the start of my thirst to learn how to syndicate. In early 2014, I hired a coach. I hired a mentor who was actively doing that. I built out RSM Property Group, and I completed my first real estate syndication with my mentor's help in middle of 2015. So that's how I got started.
Because real estate is a people's game. It's a networking game.
Correct.
There's not a lot of people doing this actually. So how do you go about and develop your relationships with brokers and property managers? How do you do it?
Yeah, there's no silver bullet besides the fact is you've got to concentrate on being in front of these people, making sure you're seeing the right deals in your market. So really, really understanding who are the leading brokers in your particular market that you've chosen, and actively courting them, like as if you'd court a girl or a boy on a date. You take them out to beers. You may go play some golf, and that is very much a part of how you get to see the best types of deals that hit the market and when they hit the market. So you want to be consistently following up with them, maybe once a month. But there is no quick fix to getting a broker relationships. Essentially, at the end of the day, you have to close on deals. And once you start closing on deals, you get more respect, more credibility, and then you go from there.
Yeah, because at least for me, now that I haven't done my first deal yet, but I have a couple of them on the LOIs. But it took me a while to actually figure out some brokers who actually took me serious, because when you start calling people, they think you're a tire kicker and don't think they're serious. But when you start following up and showing financials and showing that you're actually serious about it, then they start taking you serious and then start sending you better deals. Did you feel like 100%. This a little bit in the beginning?
Yeah, I had the power of, if you talk about my first deals, definitely it's a lot easier with the small multifamilies because there's a lot more of them, right? With the larger deals, it's a more of showing a credibility book, a pitch book, right? I had to show them the team that I'd assembled, my mentor, another partner of mine. I had to show my background, their bios. Really had to present a front that I knew what I was talking about, even though I may not have actually gone out and done a deal yet. So it's a little bit more of a presentation that I was for these large deals, so that I could start seeing the right types of deals and then start putting LOI underwriting and put LOIs on them. But it really did start with what's called a credibility book, which really summarized the A to Z of what I was trying to do, the team that I'd developed, and my background as an engineer, which I could bring some experience across into the real estate investing on a larger scale when I start syndicating.
At this time, cap rates are getting a little bit compressed. Markets are reaching all-time highs. How do you find deals now? Do you need to go outside your area? How do you think about this process now?
Yeah, it really comes down to the underwriting process in my mind. You can always find a deal in any market. It's just about how you're finding the deal. What are you valuing? I really look for in-place rents per square foot versus what the market is charging for. If there's a big disparity in the market, in those in place versus what the market is, then that gives me that's a green light, because I can,
Okay.
can go in there and pay for maybe pay a little higher for the deal, knowing that I can increase those rents significantly over a short period of time.
Gotcha. But
So
yeah,
I really look to my underwriting process and my underwriting team.
so, but you at now, what type of markets do you like right now?
I am looking in what I like to call tier 2 markets. So, your Dallas, Fort Worths, San Antonios, Kansas Cities, Phoenix, Arizonas, Charlotte, North Carolinas, these sort of what I call tier 2 cities. When people think of the United States, they think of Los Angeles, San Francisco, New York, Chicago. They're the tier 1 cities. You got then the next one down to the tier 2s. These are the cities where the cap rate's a little bit more moderate, between 5.5% to 7%. Where you can get a bit of cash flow, but you still have people who want to live there, who are still fantastic employment opportunities, but the cost of living is a little bit less compared to, say, New York and LA and San Francisco. So still have very good population growth, and there's still a lot of gems there you can find that you can go and add value to, and essentially increase the cash flow and increase the NOI. And because it is a moderate cap rate, meaning between 5 to 7%, you can get some cash flow, which is fantastic.
Gotcha. At this time, it looks like you have a lot of deals coming about and knocking some deals down. How do you see yourself in the future, in the future of your company? Where do you see yourself heading?
Yeah, I think the big thing for me is to really build out my personal brand. I really want to be a key person of influence, or an influencer in my sphere of multifamily syndication here in the United States, particularly in the space of attracting international capital to the United States to invest here. I still think America has a great balance of cash flow and appreciation, unlike some other more Western countries like Australia, where cash flow isn't really as prevalent as it is here. So the dynamics that America has, population, the different states that people can invest in, it means that there's a lot more opportunities there for people to create cash flow, to create appreciation plays, rather than, say, in Australia, sort of you may buy a deal and you hope that it will increase in value over time. So it's a sort of a different type of investing strategy. For me personally, I want to continue to grow my business. I want to create an ecosystem of other businesses. So having I want 2,000 units in the next 24 months. Through that, I want to be able to create my own property management company. Through that, I want to be able to create my own construction company where I can source product from China. I.e., light fixtures, plumbing fixtures, and it all really stems around the fact that I have a large portfolio of units where I can use the direct sourcing methodologies to create a business, to then essentially mean that my investors don't have to pay as much or retail premium for renovating these units, which means that their returns are better, and I create a more stable investment firm rather than just acquiring assets, because we're not always going to be acquiring assets, and you need to plan for the long term. So having an ecosystem of different businesses is really, really important in my mind, plus being an influencer to attract that international capital.
Gotcha. And going back, what type of what would you say going back? What advice would you tell yourself?
Yeah, look, going backwards, I think the biggest thing is get a mentor. People who sit on the fence about getting a mentor, it's helped me extremely. It's helped me become the person I am today, and I'm nothing. I've only achieved a little bit. I've still got so much more I want to achieve. But having that mentor there to back your decisions, or to help back your decisions, to use them as a leverage to get into your first deal is very, very important, because once you get into your first deal, it's very much a snowball effect from there. I'll learn from people who've made the mistakes before, so you don't have to be the one making those costly mistakes. I think that's really, really important. There's a lot of people out there that try to do it by themselves, that try to go out there and think they can do it all on their own. They make a mistake and inevitably maybe lose some money. And the thing is, you can avoid that if you partner with the right people and the right team. So first and foremost, get a mentor and be educated on what the niche of real estate investing that you want to get involved in.
Gotcha. And regarding books, what type of books are you reading lately?
I'm actually reading a little bit more on the business side of books. I just wrote reading a book called 24 Assets. It is by Dan Priestley, an Australian author, and it's more to do with ecosystems, more to do with creating assets within your business, not real estate assets, but I'm talking about educational platform assets. So books, podcasts, video content, posters, stuff like that to help attract more people to your business to then, hopefully one day become an investor or, I attract better employees. That's what I'm really reading right now. Obviously, the Rich Dad Poor Dad is for anyone out there listening, it's a fantastic book. Get your hands on it if you can. Another one is called Pitch Anything. Another fantastic book, read it a few years ago. So there's a lot of different books out there. People can head to my website. I've got a bunch of recommendations on my website that they can download and hopefully get some knowledge.
And finally, where can our listeners get a hold of you if they have any further questions?
Yeah, go to www.reedgoosens.com. That's REEDGOOSSENS. If you want to hit me up, if you're coming through Los Angeles at all, you want to go for coffee or lunch, I'm always open to meeting with different investors. You can hit me up at reed@rsnpropertygroup.com and just give me some heads up, and more than happy to meet up for some coffee or lunch or even a beer.
Reed, it was wonderful having you with us today. Hope to speak with you soon.